Hey, what is going on everyone? Welcome to another video. This one is going to be the part 3 of the fixing series. In this one we are gonna go over the lower time frame entries and we will put all the things together of those previous two videos. So now before starting the video, thank you to T-Trades. Most of the concepts I'm using in this video are taught by the T-Trades. Now starting with the introduction, bringing bias to the intermediate time frames. So in the introduction, this is the important part. Once you have established your high time frame bias, you will bring only one type of bias to a lower time frame. There will be no subjectivity. For example, you have a high time frame closure or daily profile supporting your idea of the bullishness, so you will go into the lower time frame only expecting a bullish bias, or you will go into the lower time frame expecting a bearish bias. The best way to do it is letting the second candle of the swing point print, expecting the third candle to expand lower or expand higher, and then fourth candle is a continuation. And you can assess the open low high close or open high low close or the daily profile of the candle using the candle formation or the daily profiles, which is covered in the second part. Now the first element is the time. You have to always align yourself with the session you are trading. For that you can also use the 4-hour candles or just the sessions. Like for the newer session, I'm trading post at 30 on the Forex and gold, and on the indices I'm trading post 9:30 because all of the manipulation is over until that window. For the London session you can trade from 2 a.m. to 6 a.m. and you can also use the 4-hour candle as your session as shown in the next schematic. Like we have the 18, the 22, the 2 a.m. and then the 6 a.m. reverses. So now I can trade this 6 a.m. whole candle, which is starting from 6 a.m. to 10 a.m. which includes the drivers in 9:30. So this is your newer session, and the 10 a.m. to 12 p.m. is also included in the newer session. You can trade these two candles to filter out. And if you are trading London session, you can trade the 2 a.m. candle, which is starting from 2 a.m. and ending at 6 a.m. If you are filtering that with the 4-hour candles, you can choose the 6 a.m. and 10 a.m. for the New York and 2 a.m. for the London session. Now what do you need before entering? I've talked about this in my previous video and also the videos prior to that. You need an established high or low of the day to trade away from. Why is that? Because the established low or high of the day actually removes the blur. You know that protected swing or the wick of the daily candle price is willing to expand higher or lower, and I can trade the continuation. Now we have some special cases, the New York reversal. When we don't have an established high or low of the day, the New York session is reversing. In these cases you don't need a closure above or below the consecutive series of candles on the hourly chart. You can use like the lower time frame crossover. Like we have a New York reversal, the whole daily range is consolidating and protraction down. We have a New York reversal. If you are letting this change in the state of delivery print, then you will miss the whole move because the New York session is volatile and is expanding. For that you can do few things. The first thing is going into the lower time frame and confirming reversal within this candle, or you can go to the 30-minute time frame, which will split this candle in half. We have the first half, the reversal candle, the second half, the expansion candle, and you can trade prior to the close or above the down close candles or the closure below the up close candles in the bearish case. Now selecting a swing point, this is like the most asked question. Every reversal or pay the price delivery requires a swing point. The market cannot operate or change pay the price without a swing point. Now here we have an established low of the day. The price expanded, it retraced into a fair value gap, created a swing point there, then expanded higher, then retraced again into this previous order block or taking this low, then expanded again. In this case we have an established low of the day, expansion higher, consolidation. We don't have a fair value gap, but we have purged this low and we formed a swing point with this top hunt. Now in this case we have an established low of the day, expansion higher, consolidation. We created a swing point and expanded, but this is a failure swing to this candle because correlated SS already has taken this low, so we don't need to take this and we can trade the SMT divergence higher. I have also a dedicated video about that, you can check that out. Now which PDRA to choose? You never know what exact PDRA the price will respect, but the simple solution is you have to use the signatures, the confirmation methods, which is the lower time frame change in the state of delivery within the candle 2, or letting the whole candle 2 print and trading the candle 3, which is the T-Trades fractal model. What do we have here? We have an established low of the day, then expansion higher. Now we have a retracement. How do we know which fair value gap the price will hold? We have a fair value gap down here, a fair value gap up here. So the simple solution is you have to let the swing point form. We reacted off of this fair value gap. How do we know? we had a lower time frame change in the state of delivery, a reversal signature within this candle. This itself is a signature that the price is respecting this PD area and now it will expand higher. Or you can let this whole candle print and trade within this candle third or candle fourth of the swing point. Now we will talk about the candle 2 entries and the candle 3 entries, which are the high probability, what are the pros and cons, and I will be going over more in the examples. Now the candle 2 entries, which confirms the reversal within the candle 2, a change in the state of delivery. We're expecting the candle 3 to be expansion candle, which is that same next day model. Pros are sometimes when we have a small wick, an early change in the state of delivery, it can give us a high RR and less decision making. There will be no decision making whatsoever for letting the wick form or something like the candle 3 and work best when we have a small wick. Now the cons, large change in the state of delivery, large stop loss, skewed RR, and direction is not fully confirmed until the candle closure. I will show you in the next example. Now here we have a candle 2, a change in the state of delivery. Now we are entering within the next candle after the change in the state of delivery. We enter at this candle open and we put our stop loss below the body lows and we targeted 2R. The price expanded, completed our 2R objective. Now what are the pros? If this candle had a small wick, we would have entered right here and our stop loss would have been very small, so we can get like 3RR. But in this case we have a large change in the state of delivery. We are barely getting 2 to 1 RR, and that's the cons of the candle 2. And one thing more, we don't know if this candle will expand higher or it can reverse on us. When you are letting the candle 2 print, it confirms the idea of the swing point and you can simply trade the candle 3 expansion higher. Now the candle 3 entries, that is occurring when you let the candle 2 print on the higher time frame and then trade the candle 3 within that order block formation on lower time frame. The pros are you will be having smaller stop loss, large target, more confirmed entries, because the candle 2 shows its intent that it is reversed. Now the candle 3 will expand, and the cons are sometimes the candle 3 will expand directly away without forming an order block. If then validation isn't clear, you may miss the move. More decision making required. So I will show you in the next example. So here we have that same example right here. We have a change in the state of delivery within the candle 2. We didn't enter here. We let the candle 2 form. Now the reversal is confirmed that the candle 2 have a large wick, close bullish. We are expecting the candle third to expand higher. Now in this we have some kind of decision making because we are waiting for the true order block. Now we have a close over the down close candle which validate this order block. Now we can enter the next candle and we can put our stop loss at the wick lows, the body lows. So in this case we have a high RR because the order block size is small compared to the change in the state of delivery that we previously had, and we expanded higher, but in this case we got 3 to 1 RR, which is high RR and more confirmed entries. So these are the pros and cons you have to keep in your mind. So now we will go over the examples step by step and I will show you how I'm using the lower time frame entries, or how I'm bringing buys to lower time frame, and we will combine it all together. So here we are on the trading view on the NQ daily chart. I will go over the NQ examples and then I will go over the Forex. So here starting with the 29th of August, what do we have? This is the weekly closure, the Friday candle close, and we will be trading inside the new week. What do we have in the previous week? We tapped into this fair value gap, took these two highs, and we have a closure below this up close candle. Supports the bearish expansion idea to this low, but we have a Monday bank holiday, so I'm not trading this. So we will let the Monday / Tuesday candle print. So what do we have now? With the next week, we have taken this low on the NQ, and on the ES we are creating SMT divergence, which is supporting that idea that this is the weekly low. And on the weekly chart this will look more clear because this is the whole weekly low. We are taking that on the NQ and we are creating SMT divergence on the ES. So now we can say that we have printed the low of the week, and we will confirm that with an hourly change in the state of delivery, and we are expecting the Wednesday and Thursday to expand higher, and we have this high as a drawn liquidity letter for the week. So now we can go into the lower time frame, which is the hourly. Now going into the hourly time frame, you can see that this candle's wick, this is like a whole candle, the Monday's bank holidays price action, and this is the Tuesday candle. It went lower and now it is going back higher, and it is leaving a signature which is a change in the state of delivery, and we have SMT divergence at this low too, which is supporting this as a change in state of delivery. So now we can say that we have a reversal candle established on Tuesday and we are expecting continuation higher. So now we have one-sided bias and the filler swings are supporting our idea. We have a bunch of filler swings right here. Now we will skip into the next day's New Year session. Now going into the next day's New Year session, what do we have? we have an established low of the day, consecutive series of down close candles, followed by closure above. This is not a cleaner one like a V shape, but it is a reversal because we are reaching this fair value gap and now closing above those down close candles. So in this case, we have an established low of the day prior to the New York session. So we will be trading the New York continuation higher, Asian reversal, New York continuation. And what are our targets? We have fair swing on the highs. Now I need a swing point formation in the New York session. How do I get that? How do I know which fair value gap will work? Which point of interest should I select? So for that, I have to wait for the equities open. Now this is 5 a.m. So I will skip it into the 9 a.m. Now going into the 8 a.m., what do we have? We have a structure that we have a failure swing right here, a fair value gap in the price section. The price expanded. This is kind of a retracement. Now we can see entries after the 930. Now going into the equities open, what do we have? We left an equal high on the top and we have a failure swing above that and we expanded lower, traded into this fair value gap. How do I know that the price will reverse from there? Simply, I need a lower time frame signature, change in the state of delivery. Since the 930 candle expanded lower, so I can expect the 10 a.m. to reverse higher and take those targets. Since I have a bullish steady bias, I cannot expect a bearish entries with equal highs on the top. I will be having only a single bias. So now going into the 5-minute time frame, and now in the 5-minute time frame, you can see that we have that hourly fair value gap. The 930 candle expanded lower, left a filler swing, and kind of acting bearish. The 10M is our last resort for the reversal. If the price is reversing right here, it will go higher. So now the 10M is opening. So what do we do on the 10M? We actually took this low on the yes and we are creating SMT divergence on the NQ. If I go to the yes chart, this low is taken by the yes at 10M and we are creating SMT divergence with a strong closure and a change in the state of delivery. Now since we have a large candle, I cannot enter right here and put my stop loss below here. That will be around 60 point stop loss. So I would wait for a retracement or a continuation order block. So waiting for a retracement, putting my stop loss below this and targeting 2.7 R. I will put my limit entry here. And with the next candle, we tagged in. I'm putting my stop loss below that low and targeting that high. And when we have a true reversal, the price might retrace, but it can eventually go in that direction again. And why did we get that retracement? Because we took that equal high and we changed the price delivery, expansion, retracement. Now we have another continuation order block. We can also enter on that. And the price eventually went for my target, which was that bank holiday high. So how do I know that the hourly fair value gap will work? Simply by waiting for the change in the state of delivery and the reaction of the price section on that level. And when we get that on the 10 a.m. with this empty divergence, I waited for the retracement entry and we went higher. So this is how you can bring a simple bias to the lower time frames. Then waiting for the New York open and reviewing it again. We hit an established low of the day, an expansion we were expecting, and next phase is the 930. We retraced into fair value gap. Then we had SMT at the 10 a.m. and we expanded higher, reaching our objectives. So this was the first example. Now we will go over the next day. Now going into the next day's price section, we still have a bullish bias because we have a reversal within the candle 2, a change in state of delivery. The third candle of the swing point kind of expanded. Now it is closing in a consolidation. Now the next candle is opening. What do we have on the daily chart? We have a fair swing, the previous day high and the daily high above that. So this is now our drawn liquidity, but we are kind of in consolidation. If we are taking this low, we can reverse from here, or we can close over these down close candle and we can use this as an established low of the day and we can trade the new day, the continuation higher. So going into the new session. Now going into the new session, what do we see? We have a closure above the consecutive series of down close candles, which is confirming that order block. Now this low is protected because it is reaching into this previous order block. Now we can see continuation entry to that high, but what the 930 did, it left that filler swing high and equal high, and it is leaving this is a filler swing 2 and the Asian low. So if we are reversing, we need a manipulation of these internal lows and then expansion higher to get to that high because we have left a fair swing and we cannot trade bearish entry within a bullish bias because our overall bias is bullish. So now waiting for these low to taken on the 10 a.m. and then trading the expansion higher. Now I'll drop down to the 30-minute chart, and on the 30-minute chart you can see within the first half of the 10 a.m. candle we manipulated these lows and now we have a candle 2 closure. We can trade the candle 3 expansion higher and we have that established low of the day using the previous day's order block. On a 30-minute chart it is more clear. We have down close candles followed by closure above. Now consolidation, manipulation, and now expecting an expansion higher. So now dropping down to the 3-minute chart. Now on the 3-minute chart, you can see that we have a change in the state of delivery within the 10 AM candle. It is kind of a large wick, but a small change in the state of delivery because we have manipulated this low again. We have a breaker block, low, high, lower, low, higher, high. So these are multiple confluences. So I can enter within the 10 AM candle and expecting the next candle to expand higher if I'm trading the candle 2 entries. And if I'm putting my stop loss below the lows and targeting that high, that will be 1.5 hour. And if I'm putting it on the bodies, this will be 1.9 hour. So what I can do is I can put my stop loss below the breaker because the breaker block low is a protected low and it is around 2 hour now. Sometime the next candle open won't get you an entry because in this case the 1030 candle expanded directly away, consolidated, and then expanded again. We don't have a continuation order block, so we can capitalize on the previous order block and adjust our stop loss according to the PD arrays. So this is like the privilege of the candle 2 entries. You can get early entries with a simple system, not a complex system. For the candle 3, you have to wait for that swing point formation, that next order block, putting your stop loss below that, and then targeting that high. We had a Tuesday reversal, Wednesday expansion, Thursday expansion higher, and now we have our weekly target above there. This is our drawn liquidity going into the newer session. If I go to the daily chart, there is our only objective right here. We can change the Vela price delivery upon reaching that high. So we will act accordingly. Now going back into the hourly chart. Now since the third second expanded higher, we are in a continuous expansion. So we need another Vela price delivery, either reaching that high and printing that TGIF setup or a continuation higher if we get a continuation signature. So going into the newer session. Now going into the newer session, the at 30 expanded higher above the high. Now we will see the reaction of the 930. Now the first half of the 930 candle is printed that reversal signature, which is kind of suggesting that next feather price delivery. So now we will go into the 3-minute chart. We have the 30-minute candle on the right side. We are in consolidation. Now what do we have? 930 manipulated that high and closed below this up close candle, which is suggesting the change in the state of delivery. If we are entering at this candle, our stop loss will be around 50 points. So I would wait for the continuation entry. Now going into the 10 AM, we are consolidating between the range low and the range high. And at this stage, now we have SMT divergence at this high with the ES. That high taken by the ES, and the NQ is creating an SMT divergence. If we would have entered at the previous entry, we wouldn't get stopped out. We can still get 2R, but I need a smaller order block. Now in this case, you can see we have a smaller order block. If I enter at the retest, because we have very small space to the retest or the limit entry, putting my stop loss above the body, which is 34 point, and targeting this data low, which is giving me around 3.5R. So I will enter with the limit entry. And you can see that we expanded directly, creating a small wick within the 11M candle, and we expanded lower because using the smaller order block and the continuation entry gives me clarity and a big target. Now reviewing this trade again, what do we have here? We have a whole week expansion, Tuesday reversal, Wednesday expansion, Thursday expansion. Upon reaching this high, we changed the fair price delivery. We had an expansion, mid expansion. If you go to 30-minute chart, it will be more clear. And one thing more, in this case, we didn't had any established low of the day, so the price will create that. So for that, it expanded higher and reached towards the opening price, and this data low right here. Our drawn liquidity was that high, but we met our buys from the TGIF and expecting a new feather price delivery. So now we'll hop into the Forex examples. So for the next examples, here I am on the Euro USD and GBP USD daily chart. We closed the week on Friday, picked up September, but we aren't anywhere because we are kind of consolidating in between the ranges. We have taken this high, but we don't have that reversal signature and that willet closure. So I'm letting the Monday candle print to give us that idea. The Monday candle expanded higher. Now we are in a consecutive expansion. I cannot trade this forever, so I would wait for another fair price delivery. So now with the Tuesday candle, we have taken the previous candle high, closed bearishly, so we can expect a Wednesday continuation lower. For that, we can expect a Wednesday continuation lower, but as you can see on the GBP USD, we have left a failure swing right here, so we cannot expect a bearish bias away from an equal high. And we also have this failure swing on the Euro USD, but still my bias is bullish, and I'm viewing that as a retracement into this fair value gap to then expand higher. So for that, what we can do is we can take the previous day low and then can expand hard. This is my bias for the day, and we can kind of create SMT with the GBP/USD. So dropping down to the 1 hour chart and letting the price action play. We are kind of consolidating in between, going into the London session. We have taken this low. If we are closing above the consecutive series of down close candles, then we can trade the expansion higher. And now we are failing to close, or rather we are consolidating in between the range. We have taken the range high, but with this candle, we didn't go bearish and we close above those down close candles, and the price chopped around and invalidated our idea. We are still inside that fair value gap, so I can expect purge on this low and then expansion higher, because inside a fair value gap, the only point of interest is the previous day low and the previous day high. So I can expect the GBP or USD to take these lows and then expand higher. So now going into the 5 a.m., which is start of the new session, we are taking those lows. At 8:30 news, we have a change in the state of delivery, a confirmed one. And now this is the reversal day, so I won't expect much continuation, but I can still trade to that previous day high. So dropping down to the 5-minute chart, you can see this is the previous day high on the GBP/USD and this is the previous day high on the EUR/USD. So I can still enter on the GBP/USD because we have an established order block within that candle, down close candle inside a fair value gap, followed by a closure above. So I can enter a retest entry, putting my stop loss below the body and targeting 2R, but I will put my stop loss to break even when the EUR/USD is taking the previous day high, because this is a reversal spot or another further price delivery. So I'm entering right here, and now the EUR/USD is taken that high, kind of expanding over. So I'm putting my stop loss to break even. So I'm showing you this because in cases like this, when the one pair is taking the previous day high, this is upturn time, a change in the further price delivery, either a reversal lower or a consolidation. We are near the draw on liquidity. I don't think we would reverse, and there you go. Upon reaching the high, we reversed and it was a break-even trade. Now going into the next day, we have a third straight reversal. So we're expecting the Friday to expand higher to this feather swing and this feather swing on the GBP/USD. So now in order for the next day to expand, we need an open low high close, a small wick, and an expansion candle, and established low of the day to then trade away from that. So skipping that into the price action. Now do we have an established low of the day? No. And what we are doing, we are creating a large wick, kind of consolidating between the range high and the range low, and which is not optimal for the expansion candle. So now I'm skipping this day and now going into the Monday's price section. We still have this feather swing, kind of equal highs, and this feather swing on the EUR/USD, and we can trade towards that. So on the Monday, we need a small wick, an established low of the day to then expand higher and trade that continuation. Now going into the Monday, we have the same bullish bias because we have filler swing on the GBP/USD, this high, the filler swing to this high, and we have a draw on liquidity on the EUR/USD. For the next day, I'm expecting an open low high close or bullish expansion candle. And do we have a change in state of delivery? Yes, we have down close candles in the previous day, which is acting as a protected swing. So now we can seek a continuation entry within the Monday's candle by creating a small wick and then expansion higher. Now going into the London session, we have manipulated this low on the EUR/USD and we are creating SMT divergence on the GBP/USD, which is not taking that low. So now we can see that as a candle 2 closure because it is reversing at 2 a.m. within the London session, and the Euro best pair are actually creating its low within the London session. So I can expect that as a weighted reversal, and I can see continuation entry this high. So now with this candle 2 closure on the hourly chart with SMT divergence, EUR/USD, and a protected swing in the previous day, I can see continuation on the 5-minute time frame. So dropping down to the 5-minute chart. So here on the 5-minute chart, you can see that we are closing the candle, but we are yet to close above the consecutive series of down close candles to validate that is a change in the state of delivery. So waiting for the next candle to close above this, and the next candle close above the consecutive series of down close candle, validating the change in the state of delivery. In this case, I can do one thing. You can see this down close candle is reaching into this fair value gap, and the change in the state of delivery is confirmed within the next candle. So I can now view this as an order block because we are closing above the down close candles. I'm entering at the next candle, putting my stop loss below this swing low, and we expanded higher to that previous day high within the London session. So now reviewing it back, going into the hourly chart, we had a consolidation in the previous day, a protected swing which has taken this low, and we can like trade this day the continuation. We have established low of the day. The EUR/USD is taking the current day low, and the GBP is creating SMT divergence. This cannot do as a protected swing, and we can trade the candle 3's expansion to the previous day high. And why I chose that lower time frame order block, the reason is for the next candle we need the wick of the candle to form from an order block or a protective swing. So we formed the wick close above the previous candles, validated the change in state of delivery, but also this can be viewed as a protective swing. I entered the next candle and the price expanded in my direction and completed our target. Going into the next day. Now going into the next day, which is Tuesday, we still have a bullish bias because we have failure swings on the Euro USD right here, and the GBP USD is kind of closing above that. So we will choose the Euro USD to take the entry, and we also have this high as a drawn liquidity, which is the previous week high, and we have a protected swing. Thursday, Friday consolidated, Monday expanded, and we're expecting a bullish open low high close candle. So dropping down to the 1 hour chart, we have down close candles into a fair value gap followed by a closure above. Now we are kind of consolidating, so we need a low up the day to form, and then we can trade the expansion higher to that drawn liquidity on the Euro USD. So for that we need a protected swing. Now we have taken the current day low and we have left kind of filler swing right here, which is creating SMT divergence. I cannot take entries within the Asian session. I would wait for the London session if it is providing me a retracement entry, so I can keep it alive on that. And we have taken this high on the GBP USD. We can expect a next further price delivery, and we still have that filler swing left. We are near to a drawn liquidity, so we would be reaching that. Now what point of interest do I have in the price section? We have a 3 candles of expansion. I can expect a next further price delivery, either retracement into expansion or a reversal because the GBP has already taken that high. So waiting for that to happen. Now inside that hourly fair value gap, we have taken the previous candle's low, and now we need a change in the state of delivery to try to that high. Dropping down to the 5-minute chart. Now we need a closure above the consecutive series of down close candle. If I'm entering on the GBP USD, which is the strongest asset, it is not giving me 2 hour to that high, so I would stick to the Euro USD entry, but for that, we need a closure above these down close candles, and now we get a closure above. So I would either trade a continuation order block or wait for a retest, putting my stop loss below this low and targeting that high, which is giving me 2.4 hour. So I'm entering with the limit entry here, and we eventually expanded higher, completing our objectives. So now reviewing this trade on the daily chart, we were expecting this high to get taken because it was a filler swing to this high. So our bias was bullish, dropping down to the 1 hour chart. On the 1 hour chart, we selected the Euro USD because the draw on liquidity was not taken by this pair. We had an Asian reversal, down close candle, taking this short-term low inside this previous order block, change in the state of delivery, and established low of the day within the Asian session. Now we had an expansion going into the London session. We had a retracement into the fair value gap, and as you can see, that new phase or the retracement occurred within the 1 a.m. to 5 a.m. candle, which is that 4-hour candle. We created the low within the 1 a.m. candle. We traded 2 a.m. as expansion to that draw on liquidity. So we had a reversal with an SMT divergence at this low, and we dropped down to the 5-minute chart. On the 5-minute chart, we had a consecutive series of down close candle with SMT divergence inside the hourly fair value gap, closure above. I entered at the retest, put my stop loss below this low and target that high. This was the whole trade idea, and what I was talking about the candle 3 was that sometimes you get a candle 2 change in the state of delivery, and the candle 3 will be expanding directly, so you can place your limit entry on the candle 2 change in the state of delivery or find a continuation order block, which we didn't get in this case. Now with this, I will wrap my video. Hope you guys have learned something from this, and I will also arrange some pre-recorded backtesting session in future. Thank you guys for watching. Make sure to subscribe to the channel and like the video, and see you next week.